Hey everyone, we got some huge news for UiPath stock investors as the company announced a massive cost-cutting campaign. I'll go over what these cost cuts mean for UiPath stock investors in this video. I'll also connect what this means for the latest leadership changes and the cost-cutting plan, how they relate to each other. And finally, I'll update my buy recommendation for UiPath stock, let you know if this stock is a buy, hold, or sell at current valuations following these recent developments. So let's jump right in. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. All right, so let's start with the most recent announcement, which is on July 8th, the company announced restructuring actions to manage its operating expenses. These actions are expected to include cost reductions or employee reductions of 10% of its workforce of approximately 4,200 as of July 1st, 2024. Most of this reduction is expected to happen by the end of the first quarter of its fiscal year 2026. If you don't already know, the company's currently in its fiscal year 2025. UiPath estimates that this will cost them about $15 to $20 million related to employee termination benefits and about $2 to $5 million in connection with lease exit and other contractual costs. So the total expected costs are approximately $17 to $25 million and expected to be cash expenditures, which will be incurred by the first quarter of 2026. So let's break this down. Now, I've highlighted that I've not been a fan of these big cost-cutting initiatives, these big job cuts, because I've felt that these can be done more efficiently instead of doing it all at once like this and taking these big expenses, because you've got to pay the employees severance and termination benefits, and that's where the bulk of the expense is here. 15 to 20 million going to these termination benefits. I've felt that it could be more prudent to reduce your employee count through attrition. Just let the people leave and don't replace. There's always going to be people that are leaving, going to other opportunities, people retiring, etc. So I've felt that that could be more efficient. However, there are cases to be made where a one-off, cutting of expense makes sense, especially with leadership change. And you've had that with UiPath, which I'll talk a little bit more about later. They've got a new CEO or a returning CEO, and new leadership probably wants personnel that fits with the new strategy. And so that I understand. One area I do appreciate here is the cutting of lease expense. So with fewer employees, you need less office space. And office space, I've felt, is one of the most wasteful expenses in the remote working environment that we're in now, post-pandemic. You can operate remotely. You don't need to have office space, or you don't need to have as much office space. So I've always favored strategies from companies to reduce office space, take on remote working policies so that you don't have to pay for office space, and at the same time, you make it less attractive for employees. You can attract more talent if you offer remote working. There will be some employees that want to come into the office, and so you do need some office space, but not as much as you did before the pandemic. So that's one area that's good news here. Okay, so let's move on to the leadership changes. So with its latest quarterly announcement, UiPath told investors that Rob Enslin is resigning as CEO and as a member of the board of directors effective June 1st. And this was an abrupt departure. Daniel Dines, the founder and former CEO, will be reappointed CEO on June 1st. So the founder and former CEO is coming back and taking the leadership role again. And so that's why I said earlier, it's understandable when you have a new CEO, they want to have their own team in place. These employees that they're letting go of right now might have been hired by this departing CEO. And so it's understandable that you want to realign your employee base, your talent base, based on what the new leader wants, and so that's understandable. I get that. Now, one of the other factors UiPath announced in its latest quarterly update was a big decrease in their profit and revenue expectations for their current fiscal year. They decreased their expectations to operating income of $145 million and revenue of $1.4 billion. These numbers were down from revenue of $1.55 billion expected and operating income of $295 million expected. The operating income number being the most dramatic decrease, getting cut by more than half from $295 million down to $145 million. And that change, that decrease, was the big reason why UiPath's stock price fell as dramatically as it did following the earnings release. Additionally, following this announcement, after the market closed yesterday, the stock price is down today as a result of the news. It's now trading at $12 per share, down from closer to $13 per share yesterday. Now, if we zoom out over the last 3 months, you'll notice UiPath stock price, the big decline following the earnings release, and now at 12, down from over $20 per share earlier in May. So the stock price right now is trading at a forward price to earnings multiple of 26.91, which leads me to my recommendation for UiPath stock. I highlighted that I'll update my recommendation. So I recently upgraded UiPath stock to one of my top stocks to buy in 2024. And this was prior to the news of the new CEO and the abrupt departure and the decrease of its operating income expectations. Still, the price decrease coupled with these improvements, the company should be more profitable now following these cost-cutting plans coming out. They should be more profitable next year. So to answer my recommendation, do I think UiPath stock is a buy, hold, or sell? Is it still a top 25 stock? And I think it is. I think it's still a top 25 stock. I'm updating that recommendation on July 9th, reiterating that I think the stock is a top 25 on my list. Now, there are risks with the stock, some of which I highlighted already, some of which I haven't highlighted, which is the growing competition stemming from Microsoft and other automated platforms and artificial intelligence, and whether or not UiPath services will be in demand longer term. There are risks to that end. However, at the same time, the long-term trend revenue growth has been solid for UiPath. Their profit expectations, their profitability has been improving. Their cash flow from operations has increased. And the rising cost of labor means businesses will need more automated services, more automating of tasks. And so overall, the market demand for this type of service is growing, and some of which will go to AI and some of which will go to competitors. But since the overall pie is growing, I like UiPath's position in that industry. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.